Hello, everyone, and welcome back to the NGMI podcast, a show where I speak to people about crypto investing who know a lot more about it than myself. Today, I'm speaking with Regan Bozman. He is a general partner at Lattice Capital, which is an early stage crypto investment fund. Regan was the first employee at another crypto venture capital firm called CoinList, which saw him involved in the launch of more than 30 tokens. Including Solana, Protocol, Filecoin, just to name a couple. In this episode, expect to learn what Regan thinks about the current crypto market conditions, his personal favorite investment sectors, his strategies for picking the best early stage crypto projects with high levels of conviction, and much more. I had such a great time speaking with Regan. He is truly a wellspring of knowledge when it comes to getting an edge on the market and kind of assessing and finding these early stage projects as befits his role. So I won't let this intro drag on for too long, and we'll just get straight into it. Today's guest, Regan Bozman. So for those listening who aren't familiar with you, what's your background? How'd you get started in crypto, and what made you stick around?
Yeah, so I'm Regan Bozman. Thanks for having me on, by the way. I help run a crypto venture fund called Lattice. Yeah, it's good to be here. My journey kind of into crypto starts in 2016, but I can go back a few years before that. So I grew up in New York, kind of always wanted to do like business stuff and was interested in tech. And so I graduated from college in 2013, spent some time working in kind of like the on-demand space. This is when like Uber and all of these like on-demand platforms were super hot. Worked at a company doing that and on-demand home cleaning. That business grew quite a bit, spent some time trying to start a company in that space. That went nowhere. And I found myself at the end of 2015, like kind of broke and just needing a job. And so I was like applying for jobs at other startups on AngelList, and I saw that they were like recruiting for their venture team. And I just spent a few months kind of getting rejected by a bunch of venture capitalists. I was like, well, maybe learning something about this and understanding like why that happened would be good. So I applied, I like flew out to San Francisco to interview, got the job, and I moved out to SF like 2 weeks later. Maybe I'd heard about Bitcoin before, but this was 2015. It wasn't like a mainstream topic of discussion by any means. But when I came out to San Francisco, AngelList was full of super smart nerds, and like there were some people just into crypto, and I kind of started learning a little bit about it. And then a year and a half later, we spun out CoinList to basically build a similar business around capital formation, the primary issuance of tokens. And so my boss at AngelList like left to launch that, and I was the first employee to follow him. So that was kind of like the journey into crypto. And then I've spent the last almost 6.5 years doing a bunch of different stuff in crypto, which we can definitely dig into more.
That's really cool. When I was doing some background, I came across that you had like a Bridgewater internship, and I was really curious as to, I was like, how'd the Bridgewater thing go? What was the deal with that?
Well, I mean, it went terribly. I interned there for a summer. I liked it. So like their interview processes are very like, kind of like live, like case study. Okay, there's some topic and we're going to talk about it versus like, oh, can you build like a financial model? Did you read Case in Point, et cetera? And so I had like debated in high school. And so I was kind of like, just had a bunch of practice at like running through these interviews. And so I think I applied to some other like consulting and finance internships, and I definitely got 0 of them because I just on paper didn't really look like a slam dunk for that. But then, Bridgewater was kind of a different interview process. So I spent a summer there after my junior year of college. It was like pretty miserable. It was their offices in Westport, Connecticut. It's about an hour north of New York. And so you have all these like mostly Ivy League kids kind of like competing in this like somewhat isolated competitive environment. I mean, Lord of the Flies is like a dramatic comparison. We were well paid. It's not like we were like eating each other, but it just kind of sucked. I mean, there's a lot of brilliant people there, but like I was not good at that job and it was not a fun environment. People like love to hype up Bridgewater. There's a book that came out called, I think it's called The Fund, by a Wall Street Journal reporter. He spent like a decade researching Bridgewater and kind of like tears down all of the principles and stuff that they espouse. So my current thinking is like, it's all bullshit. But highly recommend the book if you haven't read it.
Okay, cool. how did you go from Bridgewater? So I'm getting like that would have been obviously more traditional financial side. How did you go from there to looking at cryptocurrency and being like, okay, this is the market that I want to be investing in?
Yeah, I mean, it's a winding path, so I can kind of start with like each wind of that path. So,
Hmm.
Bridgewater was a bunch of people in like an office in Connecticut. It wasn't really like scrappy. And I was just like, it was pretty clear to me that like this was not what I was meant to do. So I wanted to like build companies. So I went to work at this early stage startup that I mentioned, grew that business, then went to work at AngelList and was kind of sort of on like the venture side of the table. My journey into crypto was very much not, I want to invest in this. Like when I started working in the space, I didn't know anything. I didn't know what an ERC20 token was. Like I knew nothing. It was more, I'd spent a year at AngelList. They have this kind of business around capital formation. They built a lot of software and product to make just like venture fundraising easier. And they now, I guess like 50% of like seed transactions use AngelList in some way. Like they've really built a lot of software to just make that process easier, grease the wheels of how fundraising happens. And I think it's an awesome product and like really good for the industry. But that process has kind of worked the same way for like 20 years. Like AngelList was not going to revolutionize how like seed rounds happen. And so for me, like wanting to go to crypto was not like, oh, I want to invest in this. Cause I was like, I had an operating role. It was more, people were doing these ICOs. If a seed round had like 10 investors, the Filecoin ICO had like 2,000. And so it just felt like there was much more blue ocean opportunity to kind of innovate in how like capital markets worked. So that was really like the genesis was just, hey, this is new and different. The norms are much less established. And my thinking was, maybe this is like an investment frame of view for how I value my time, but I was like, okay, I think there's something here on the crypto side. I don't know anything. So it wasn't like I was going to go join Polkadot or something or kind of make like a specific bet on what company was going to work. But it was kind of like, okay, the same way Stripe is sort of like an index bet on like internet commerce working, CoinList is going to serve a bunch of different crypto companies. And so like maybe it's de-risked a little bit. And I think like both of those bets were kind of true. Like we did a bunch of cool things like Dutch auctions and just like, yeah, there were a lot of really cool ways companies raise money through CoinList. And then I was fortunate to meet a bunch of just awesome teams early on because Filecoin, Near, Solana, like all these teams, Blockstack, all these teams were CoinList customers. And I was able to work pretty closely with them on getting their networks live.
So you were like around when Solana, not just around, but actually working on launching like Solana and Filecoin.
Yes.
Can you tell me more about what that was like? It's Solana's now kind of vying with Ethereum. So, and I didn't get really into crypto properly until like late 2021 in terms of like working full time in it, studying it, learning about it. Before that, I was very much a like Neanderthal DCA kind of like I buy Bitcoin underneath. It's good. What was it like launching things like Solana and Filecoin? Like, how do you look back at that now, seeing what they've become, and think like, oh yeah, we picked the right ones.
Yeah. So I think there's kind of two things there. One is like the process, and then the second is like how we picked who we worked with. The process was fascinating, right? Like we were generally working with these very small, scrappy technical teams. They knew they needed to do some kind of like, okay, we want to get the token in the hands of a bunch of holders because we want a decentralized network. We need some capital because like we need to build this thing. We want to get our brand out there. And, at the time there weren't LBPs, like there weren't these on-chain auctions. Like CoinList was really the best way to do it. There were IEOs, but that was much more just like, okay, like we want to pump and dump. Like generally that was kind of how they worked. And so we're a cog in the wheel to some extent because it was like, okay, this is one part of like a many step process. But it was really interesting in kind of working with these teams, understanding what they wanted to optimize for in terms of capital formation versus distribution. And there's like engineering questions because we had to distribute these tokens to like blockchain wallets. There's like legal questions because these things have evolved in kind of like the regulatory carve outs that people were using have evolved over time. And so that was just like fascinating. In terms of kind of how CoinList like selected who they worked with, it was really, I think, kind of like how most people would imagine like venture capitalist diligence deals. Like, are these people serious? Do they have a credible background? Like, are there good people from the investor side around the table? And then I think maybe like one of the more important questions then is like CoinList generally, like we did the way the deals were structured is there was some lockup on investors. And generally like the team lockup, sorry, when I say investors, I mean CoinList users. And generally, it's not like the team lockup could be shorter than that. So I think that was an important gating factor, especially then, just because a lot of these norms were less established, like of, hey, like you're not going to have all your tokens for a year or sorry, much longer than a year. Like, are you cool with that? And if a team just really wanted to do like a short-term thing, it just like wasn't a good fit. So that was kind of that was like what that experience was like. It also was like not really that crypto-y. And by that, like what I mean is, think about like what CoinList did. It's like, okay, we ran a sale, like, so we diligence the deal. It's kind of crypto-y. We have a space of users. We email them about it, maybe host some webinars, educate our user base about the team. And then there's like compliance, there's like collecting money. And these aren't like, that could be crypto, that could be fiat. These aren't really easy problems, right? Doing those things at scale is hard, but they weren't really like crypto native problems. And so that's kind of partially why I ended up leaving CoinList after 4 years. Like we built the business a ton. They were the clear market leader in this category. And I think they serve a really interesting and like needed role in this space. I wanted to go do more crypto native, like early stage work. And that was kind of like the genesis for me leaving.
So tell me, now that you're running Lattice, tell me about Lattice. What's the investment mandate and what do you guys look for in early stage startups?
Our mandate is kind of like anything crypto, like structurally. What we actually look for is really just early stage teams doing really unique things in crypto. That is like kind of where we start, and then I'll like bucket that down a bunch because that's like very broad. Our general view is that like the most interesting areas of crypto to invest in are where people are expanding the market, getting a new set of people doing something with blockchains. So on the application side, that could be something like DePIN, which is a category we've been investing in since 2021. Really there, I mean, I can talk about specific projects. They all kind of touch different industries, but like generally you look at something like Helium or Demo, which is a portfolio company, and it's not really like crypto people that were the first adopters. In Demo's case, it was like car people. In Helium's case, it was like people who were kind of just like into networking. And so we're really excited about that category because it gets new people, a new audience excited. On the infrastructure side, it's generally been technologies that enable those types of applications. So Privy, for example, which makes it much easier for people to like use any blockchain application without a wallet, without a seed phrase. That's an example of like a portfolio company that kind of fits in on the infrastructure side. So I'd say like category wise, that tends to be what we've done. I think from a like framework point of view, it's generally founders with a lot of grit working on solving real problems. And that also sounds really basic, and let me break that down a bit. So I think on the grit side, like building stuff in crypto is hard. Like you have these crazy volatile markets in the background. You could be building for NFTs and 6 months later that market is just gone. Like it's really hard. And we've been fortunate, to invest personally in some awesome companies before we had the funds, like OpenSea, Dune Analytics, Axie Infinity. And in all of those cases, those teams built for a long time when like no one gave a fuck about what they were doing. Like OpenSea they measured their customers in the hundreds for like literally the first 3 years of existence. It's like you had to really believe that like that was going to be big in order to keep working on that. And so our view from Lattice and how that informs what we do is just like, yeah, we really need to like think you're going to work on this for a long time. So we've tended, I would say, to like avoid super hot categories, maybe like blockchain gaming, DAO tooling, and like the last cycle were kind of categories where we met a lot of really smart founders, but like if you wanted to start working on blockchain games because it was the cool thing, I think we knew even then it was not going to be a cool thing, regardless of whether you think it works long term. There was pretty obviously going to be a long period where it was not the cool thing. And then the second kind of like gating of how we think about companies is just like are you solving a real problem for someone? And there it's really just trying to like deeply understand from first principles. For example, if you're building infrastructure, actually talking to like customers and understanding like, is this a real problem for you? Is this a hair on fire problem? Are you willing to pay for it? Because I think a lot of things in the space have been like, it's almost innovation for innovation's sake. Oh, this thing exists on Ethereum, so we're going to deploy it on Avalanche, right? Without maybe like a first principles understanding of like, okay, like this is the set of people I'm solving stuff for. Privacy is kind of honestly maybe an example of like a category that fits into that, where like I'd be surprised if during like diligence, you could, if you're looking at a privacy deal, you could talk to a large set of crypto users and they would say, yes, like privacy is the thing I'm really concerned about. Generally doesn't seem like that's been the case.
I do feel like there's a lot of in crypto kind of solutions looking for problems. What do you see as the biggest kind of problems that need solving in crypto today?
Yeah,
Sorry, that's a brutal question.
No, it's a broad question.
Yeah.
I think the big, like, we need to build compelling use cases. I think it's pretty obvious. You could have an endless debate about is infrastructure ready, blah, blah, blah. And like, clearly like these out, like there are things that need to be solved, right? Like still I am signing a bunch of transactions on my wallet, bridging assets between blockchains. Like I was joking with my partner, Mike, I had we both held some Terra personally that collapsed. There's been like, whatever, they like airdropped like the new Terra to like Terra holders. Selling that for like the native USDC on Cosmos and then trying to bridge that back to Ethereum. Like you try to do these things, it's really annoying, right? So clearly like there are things on the usability side, but like, StepN was at like something like 3 million active users at its peak. Axie Infinity was probably at 1 million. Like pretty clearly, like if people want to use these applications, they will, and they work. So I think like the biggest problem, unsolved problem in the industry is just like making compelling applications. And I think there are some, right? Like you look at stablecoins, clearly they work. And I think like you're starting to see these power the back end of a lot of like dollars in fintech apps. But on the whole, I think like what is the killer use case for like stuff besides holding Bitcoin? I think it's pretty unclear what the answer to that is.
I think that there's so much room for crypto to do something. That's a cop-out statement, but this is something I yeah, I hope so too. This is kind of something I wanted to discuss with you later, but I might just jump to it right now. From not just from an investment perspective, from an infrastructure perspective. So I see a lot of people talking about just in terms of actual markets, like there's a lot of debate on the timeline, particularly among traders, not necessarily it's there among developers as well, but looking at Ethereum and Solana over the next few months and then in the next few years. And, with meme coin season on Solana at the moment, I feel like a lot of people are like, aha, like this is it. This is Solana kind of coming into its own. We're going to see consumer applications built here. No one wants to pay $80 for gas. What do you see as happening with Ethereum versus Solana in the next few months? And if you had to kind of take a side on one, which one would it be?
It's a good question. So I'll answer your question, but I'll start with like a few like interesting frames of the market. One is like I generally like chains don't die. Right? Like there are probably still, I don't know how many dozen, but a few dozen people working on Ethereum Classic. Tezos still has, God knows how big that treasury is, a few $100 million, right? Yeah. So like, I think even like Polkadot, most VCs looking at Polkadot applications, like, no, but like, I'm sure there's some people into Polkadot or some people using it. So I think like these things are never binary is the point I'm trying to make. Even if you think they should die, they don't. And the second is that even if you dig into like a subset, like just take Ethereum, for example, and like look at all the big all the big L2 solutions. So let's say you kind of have the mainstream side, you have ZK Sync, ARB, and OP, and then kind of the more like degen side, you have Blast and Manta, and probably a bunch of like other L2s. There's like enough money in each of those ecosystems and probably another 10 others that like, how much money is Arbitrum given out through these like the STIP process? I think that's what the acronym is, but just through grants, right? many, many tens of millions of dollars. And you look at like how big is the ZK Sync treasury, how big is the OP treasury. And the point I'm making is like, this is going to be fragmented for a long time. Like all of these different ecosystems have big treasuries and they're spending money to bring in developers who subsidize users. Like it's just not, there's not going to be a clean answer anytime soon. So now to actually answer your question, I am very bullish on Ethereum. It is beautiful. It's what got me into crypto. There are some of the smartest minds working on it. I think ETH generally has been underpriced. My view is, I think if you believe that like more traditional money comes in from the ETF, which let's just say that's true, if you try to value any crypto asset from like a DCF or like any kind of equities perspective, Ethereum is really the only one that makes sense from like an L1 perspective. Solana fees, the burn, the gas fees, like you could never back out Sol rationally for like whatever it is, $60 billion FDB. And that's true of 90% of crypto assets. And I'm not saying that they're like incorrectly priced because clearly these markets are very liquid. But like if you were trying to value these things from like a traditional perspective, Ethereum is actually deflationary. It's kind of the only one. So my view is like ETH kind of hasn't been the cool kid on the block in the market for like 6 months, a year, whatever. But like I think that attention comes back to it, especially you have the ETF. Now, that wasn't your question about like whether or not people use it, but like these assets are reflexive and price goes up and more people use them. So I think that's like my first bull case for Ethereum. I think the second is EigenLayer. And you have these AVSs and basically, kind of a bunch of applications built on top of Ethereum, paying Ethereum stakers for shared security. You boost like the native yield of ETH from, let's say it's 4% on Lido now to like, I don't know, let's just say it's 8%. Which would actually be higher than like Sol staking rewards. So I think you look at like how fast Blast and Manta have been able to grow by kind of baking in native yield into those ecosystems. I think like some yield generating form of Ethereum becomes like the base unit of the whole system. And again, like price goes up and these assets are reflexive and it draws more people in. But that said, like, again, even bridging from ETH to Blast to OP mainnet, it is a much worse experience than just using Solana today. There's no like way around that. So I think these ecosystems will continue to grow. And if you're just trying to like punt on meme coins, like, yeah, gas is expensive today. Like Phantom is a good experience. Solana is a good experience. And I think it's awesome what they've done for the ecosystem. But I think that they like both continue to grow kind of in lockstep.
Speaking of EigenLayer, what are your thoughts on restaking? Now, I have not looked into restaking at any great length, so I'm very much like asking you, is this something that we're going to look back on and think like, oh, maybe boosting the yield wasn't a good idea? Like my initial just bare reaction is like, oh, I don't know, man. Do we want to boost do we want to have like, I don't know if I'm even saying the right thing, but like synthetic yield on the yield?
Yeah. I mean, I think there's like there's two ways to look at it. One is like the pure, what is EigenLayer? And then the second is how are most people going to like use EigenLayer? So I think in just like pure, like what EigenLayer is, the idea of like paying Ethereum stakers for security versus spinning up your own validator node is like, it's not crazy, right? Let's just say you have like a DeFi or like whatever, you have some application, you don't want to like spin up a set of validators. Like you have a community that probably holds ETH because you're building in the EVM and like you can compensate them for like, performing a service for the network. Like in and of itself, is that crazy? Like, no. And most people I've talked to think that kind of like the market rate of where that would actually net out is something in like 1% to 2% a year. Like it's not like, you would like, it's not like the market rate for this stuff is not that high. But do I think the average ETH holder is going to kind of evaluate every like AVS, which is basically like each individual project trying to get security from EigenLayer, look at like the security risks and the slashing risk and be like, okay, this is like a, good risk reward bet? Like, no, obviously that's not how it's going to work. So I don't think we know how it's going to work, right? Like clearly, EigenLayer is something like, I don't know, $5 or $10 billion in TVL. Clearly people want the yield. I think it's unclear how much demand there is from the AVS side, but just given the hype, there probably will be some to start. But I think the danger is mostly in just like, if you're staking Ethereum, right, I think the security risks are like very well understood. Like the
Mhm.
slashing parameters, in which case you could like lose what is being staked. Whereas like AVSs are kind of by definition esoteric, right? Like there are going to be a lot of them, and like the security risks of each underlying AVS are kind of by definition very different based on what network you're securing. And so I think like the security risks are like, one is just when you combine a bunch of that together, kind of looks something like stacking a bunch of mortgages on top of each other, right? Like the actual underlying risk starts to like just get a little bit grayer.
Yeah.
And then the second is like, for what is like how much ETH can you rehypothecate? Like how many how many like dollars of security can $1 of ETH guarantee? It's probably more than one, right? Because like what's the chance like any given AVS is a slashing event in a year? I don't actually know what it is, but like you could back that out. But it's crypto, right? People are going to try to juice this stuff as much as possible, and so it probably seems inevitable that there will be some blow up. I'm not necessarily the whole system, but like clearly something will go wrong at some point.
Yeah. When you add that much risk into the system, because I know that a lot of people are like very much jumped into EigenLayer for the Eigen airdrop, and that was a huge like mechanism behind it. Because I mean, they opened restaking for like a day, and 2 billion just went in. It's like,
I mean,
okay,
searching for yield clearly has product market fit in crypto, right?
yeah,
Like you have this ETH and it's sitting here and it's earning 4%. And like, if you can offer more than that, especially
why
in the
not
current,
8%?
yeah,
Yeah,
exactly. And this current airdrop paradigm, like yeah, people will they'll do a lot for it.
speaking of the current airdrop paradigm, there's so many different projects that kind of have the airdrop meta. Like Celestia is very much like, oh, hold and stake that, and you'll be rewarded. Do you think that the airdrop meta is, if you haven't been doing it already, do you think it's too late to be trying to stake things, or is now a good time to more aggressively move into spot? Or what's your take on
Yeah.
that?
Um, we talk about this a bunch internally. So whenever we're telling, like, the advice we give to projects in our portfolio is generally like launching at like a pretty moderate valuation is not a bad thing at all. Now, obviously, they can't like control what the market price is, but like it's more trying to blow your FDV out of the water on day one. I generally think is a terrible way to go about launching. I say that because I think it's like pretty clearly supported by data. I think you look at a lot of projects that have a really strong community, and actually even taking a further step back, what is community in crypto? There's a lot of different ways to look at it. One cynical way, at least for fungible tokens, is like, has your community gotten rich? And generally, if that's the case, that's pretty correlated with having a strong community. And how does your community get rich? Well, we can talk about like the airdrop way that happens, but generally it's actually like they were just able to buy your token on the open market for a not that high price, or like farm it or something like that. And so Solana traded below, let's just say $5 for maybe like the first 6 months it was live. It's probably less than $1 for at least like the first month.
Mm.
AVAX was like pretty cheap for a while. Chainlink, like Aave, like a bunch of these things, like none of them really blew it out of the water on day one. And so you have a base of like Link holders whose cost base is probably 50 cents, and they're going to be Link Marines until the day they fucking die. Like even that thing is a 75% drawdown, they're still like, you know, in the
The
black. And like
linkies will
they're
be
gonna,
there. Yeah.
yeah, they're gonna support that thing.
Yeah.
So look at like what's happening with airdrops, and essentially these projects want to maximize the FDV because they want to maximize like the notional value of the airdrop. And so they go out of these really high FDVs. And it's been an up only market largely since like these since this started. So I think it's a little bit hard to like look at the counterfactual because not all these things have really come down, but I think it's just a dangerous position, because once these charts are kind of like down for a while, look, people in crypto don't really love redemption stories. Like they tend to like the new thing. And so if you go out at 10 FTV and it's kind of hard to sustain that, like that's just really hard. And the airdrops, obviously your community has gotten these tokens, but they've never been able to buy more because it's so expensive. And so I think that just sets you up where like the base of token holders is not necessarily like that diamond handed. Now, history will show how this plays out, right? I think it's kind of hard to like see exactly where this nets out, but that's really what worries me about the airdrop paradigm. And, I think just generally launching at a super high FTV out of the gate, especially at the peak of a bull market, which like clearly, I'm not saying we're at the peak, but we're in one now. Once you've had 90% drawdown or something, which a lot of things do during a bear market, it's just like very hard to come back from that.
Yeah. Psychologically, you do not want to be looking at a chart and being like, that's where I got in and this is where I am here. But if you've got like, yeah.
And like Definity is like ICP is the classic example of that. We'll see. Look, I think airdrops are awesome. Like products rewarding users for trying them are really cool. I've benefited from some. I'm skeptical that like this lasts forever just because nothing in crypto seems to. So I think like people will find some new way to like distribute tokens. But, I think like these projects rewarding early users is generally a really good thing. And it's very much in line with like the crypto ethos.
Where do you think we're at in terms of the market cycle right now? Like I'm very much like I have my own kind of personal, probably too bullish opinions on it, but I'd love to hear where you think we're at in terms of not asking you to say how much time do we have left, when do I sell, but essentially, how long do you think this can keep going for before we start to witness some kind of like, oh, okay, we might have got overexcited?
So I think just setting the stage, like I got married in mid-November, was on my honeymoon for 2 weeks, kind of came back at the end of the month.
Yeah.
Thank you. And I was like, what the fuck happened? Like those 2 weeks, I'm sitting on the beach in Brazil and I come and like everything has like rallied massively. And it's funny because like it wasn't just like, okay, the ETF lawsuit announcement happened. It seems like this is inevitable and it starts like going up. I think it was like a combination of like, you had some of these first Sol airdrops like Pith that created this wealth effect. Sol starts rallying and then it's like, okay, the ETF's going to happen and kind of everything has been up only. And then obviously the ETF did happen. I think we bought some tokens out of our fund last year. Those have done well. I wish we had bought more, as does everyone. But I think like
everyone, yeah.
The thing we missed is like looking back, even in June, it should have been like, dude, if you had like Sol or even ETH and you like wrote it down from like 3,500 to 800, you held it after fucking Luna, you held it after FTX, you held it after the bad SEC news, like pretty clearly like a lot of the weak hands by then had kind of gotten like flushed out of the market. And so I think like, I'm not like a TA trader, like maybe there actually are metrics to like look at that, but like intuitively, like I think it's just one of the things like we miss where it was just like, yeah, pretty clearly like the market was like pretty well positioned to when it started going up, it would go up a lot because I just don't think there's that many natural sellers. And then, I mean, the rally in the last 3 months has been crazy. Like I think if you look at like the price chart of Bitcoin hitting all-time highs in prior cycles, 3 months is a very quick time for that to happen. So that's like just different than what's happened in previous cycles. I think the second thing that's different is like Bitcoin has hit all-time highs and no one is talking about it. Now, I don't like, there's, whatever. You can do like the Google search trend lines. You can use Coinbase's App Store ratings to like measure
killer
retail
metrics.
Interest. Yeah, imperfect, but probably directionally indicative. But like, it doesn't seem like it's really that high yet. So that's just like a different dynamic than has existed before, right? I think it's really just like money comes into Bitcoin, there's this Bitcoin wealth effect, and that kind of like flows down the CoinGecko ratings, which is just a little bit different than what you had before, because you'd be like, okay, people would buy ETH, and then there was like DeFi, and you could like farm with your ETH. So, I guess like the question is like, where do we go from here? You mentioned EigenLayer. I think to me, the pretty clear like next retail mania thing of what you could do to earn yield is like going to be just like yield farming around ABSs and like whatever, getting a bunch of yield on your ETH. So we'll see what happens with that. I guess it's probably like May to summertime, when they're planning to launch, when that could happen. I think like you have a pretty good backdrop, right? The happening is happening. Bitcoin supply obviously hitting the market will go down. These assets are reflexive, and so Bitcoin has hit all-time highs. More people will talk about it. From like a venture perspective, which is the thing I know best, like there's still a lot of funds that have a good amount of dry powder, right? I think a lot of VC funds were very conservative last year. They didn't want to have to raise more money because the LP markets were terrible. So they held on to their chips. And now, like, either they saw the run up and they started deploying a bunch of money, or they didn't. And now they're putting a bunch of money into the market. So I think like you're not going to see like a 50% drawdown, because like there's a lot of people waiting on a 10-20% correction who are just going to put a bunch of money into the market. Now you extend that out 6 months, and like I think that a lot of crypto VC funds will go raise new funds just because the LP market will be more attractive. Now I have some open questions on like structurally how healthy and how long you can have that, because like there's way more money that goes into these private tokens than there is money allocated to holding liquid ones. And that's still a big imbalance where like everyone kind of just needs retail to buy their tokens, right? It's not like you have index funds that are like just their mandate is to hold like large blue chip tokens. So I don't know. I mean, it's kind of like the obvious answer. It feels to me like we still have a ways to go, but I think this market is like very different than the cycles we've had before. And it just makes me kind of cautious to like try to predict how exactly that plays out.
I agree with you. I've spoken to a lot of people that have either been caught with their pants down on the run up, or know many others who are in a similar boat. And these are people that have been in crypto for many years who are like, uh-oh. And they're kind of waiting for that 20% drop of like, oh, I'll get the next. And instead of going like, it's just these tiny little ladders and then up and up again.
Yeah, and I don't know what stops that. Like, I don't know that this is going to happen, but I think one like risk scenario is just like, you have a lot of low float, high FTV tokens, Optimism, Arbitrum, WorldCoin. I'm trying to think of what else. There's probably a bunch. There's probably a bunch of others. And my mental model is like, if you are a VC and you have those tokens and you're up 100x from the seed round, it's very hard to make a rational case for like, oh yeah, I'm not going to sell this, right? So I think like maybe a kind of, I'm not saying this is going to tank the market, but I can see some of these large cap coins correcting where like there's an Arbitrum unlock in 10 days, $1 billion of tokens are going to hit the market. Sorry, not hit the market. They're going to go to investors. Arbitrum only trades $1 billion a day. So like, yeah, I'm not saying 100% of those VCs are going to sell, but like if you're way up and you haven't returned a bunch of money to your investors, which I don't think most VCs have from those funds, like pretty clear like what you are going to do in most cases.
So it's not bullish unlock season yet, huh?
Well, I tweeted out this morning, I mean, the ARB price has been going up over the last week, despite this unlock being widely known. So maybe it is bullish unlock season, and I'm wrong.
It's just the new meta of just who cares? Yeah.
Yes, it might be the new meta. I mean, it's if you distill down the ETF to what it is now, it's basically like a one-directional flow of liquidity into the markets.
Mm-hmm. It's just incredible how the kind of daily volume that these are still doing. I don't think that anyone. I mean, it was kind of a bullish fever dream of like, yeah, this will happen. But I think everyone kind of discounted it as like, oh yeah, calm down, dude. It's not going to be that wild.
100%. Also because the ETF had been discussed for so long, right? Like, I think it
Mm.
was the Winklevoss twins had applied for one, or maybe it was DCG. I think it was the Winklevoss twins in like 2014.
Yeah,
And like 10,
early.
10 years later it happens. Yeah, I mean, look, I think there's a ton of reasons to be excited about what's happening in the space. I'm stoked. But I'm just coming out of Denver, the mood was like universally jubilant. And people kept
Mm.
mentioning this super cycle thesis to me. And that just like, I don't know, like if everyone is like, oh, it's fucking only going up from here, that
It's
kind
the
of makes
super
me
cycle.
worried.
Yeah.
That's what I've been
Speaking of
told. Yeah.
ETH Denver, what was the, for lack of a better word, what was the overall vibe of ETH Denver, and what was kind of like what were your biggest takeaways from there and being there and observing like ETH ecosystem, just general market behavior? Everyone's saying that the super cycle is here.
I mean, the vibe was really good. Like, I think everyone was really positive, and like, you went to Denver last year, and it was like FTX had happened 4 months before.
Mm.
Here, there's been 6 months where just like there hasn't really been any bad news. There's actually been good news, and so everyone was like really
It feels nice.
positive. It
Yeah.
does. Definitely, these buzzwords like rotate, right? So ECC in July, no one was talking about AI. There were like a lot of these kind of like wallet infra things about like, oh, we're going to make wallets more useful, et cetera, et cetera. Now a lot of the attention is focused to like the modular stack. It's shifted to like the crypto and AI stack. So definitely like a lot of kind of attention focused on that. A lot of attention focused on like EigenLayer and everything that's going to be happening with restaking. So yeah, I think we're kind of like some of the big narratives coming out of it.
What are your thoughts on the modular narrative? I'm partial to it in the idea of like it just makes sense to me, but I'm not, I'm just a guy on the internet. So how do you picture that kind of playing out in the long run? Because I do see a lot of DeFi native guys looking at the modular thesis. I saw someone call it Celestias the other day, and I was like, oh, okay, why are we so, what's the conflict there? Like if you have insight on that.
So I would be upfront that like we have not made a ton of investments in that space.
Mm-hmm.
Look, I think experimentation is good. I think people are going to run back crypto infra experiments for as long as they can, just because these things are intellectually interesting, A, and like B, tend to make money. I think like, look, it's actually kind of like the Cosmos thesis, but like rebranded, right? Like, oh, we're going to have a bunch of different blockchains and they're going to kind of all be connected by IBC, but like, they can leverage shared security and they can kind of do like leverage different things for different parts of like what blockchains do. And maybe Cosmos just like sucked at marketing and Celestia is better. But yeah, I think it's really cool to see. Like, I think you have a lot of teams who've been building stuff in that Cosmos ecosystem, like Stride for a long time, kind of like, now starting to see resurgence in interest just because there's like more money and mind share going into the modular stuff. So I'm excited by it. But I'm definitely like I'm not an expert.
Okay. That makes sense. On the more personal side, so you don't have to, shill your bags directly. If you do, that it's a safe space. But on the personal side, what are the projects or narratives that you're the most bullish on heading into this cycle? What do you see as the things that are like, this is solving problems, this is fixing issues?
I mean, I think one narrative I have started to get a little bit turned around on and kind of bought into is this like Bitcoin adjacent Bitcoin L2, or like, let's just call it Bitcoin adjacent. And the Bitcoin L2s, the ordinals, the things you can do on Bitcoin, all of that fit in. I think a lot of people were skeptical initially, myself included, because I feel like people have been trying to make a like Web3 thing on Bitcoin happen for a long time. You had like Blockstream, you had like Rootstock, you've had a bunch of Lightning. None of this really worked. And there was the like initial ordinals hype, maybe a year ago, 9 months ago.
Yeah, it was like February. Because Casey launched the ordinals protocol, it went crazy, and then it kind of just slumped. And then in like October, I think Tap Wizards kind of came out and just
it came back.
Mm.
So now I'm kind of like, okay, this is this is a real thing. I've like talked to a bunch of people who've spent time in Asia where I think a lot of like the actual usage is. It's good for Bitcoin miners. They have a lot of influence in the ecosystem. They want to earn fees. And I think like just the flows you'll see in this market, pretty clear Bitcoin is going to be the driver, right? That's just like where the money spigot is going. And so like that wealth effect, it benefits everyone, but it most directly benefits like pretty clearly like everything around that. We have a stacks position in the fund. We've been looking at a bunch of Bitcoin L2 stuff and ordinals, things around ordinals. I like that category a lot. I think to show like something we have, we bought on the private side. Karate Combat is one of our most, the companies I'm most excited about. It sounds like kind of bizarre when I describe it. It's basically these guys bought a karate league, and they're it's like a little bit like UFC, but there's no wrestling.
No, I watched the BitBoy fight, so I'm familiar with it. I'm familiar with Karate Combat.
And they basically want to like cede control of the league to fans. Right now, the token has like some governance stuff. You can vote on like fight cards and things like that. And then it's kind of like native gambling baked in. They call it up-only gaming, where basically you can like stake your tokens on who you think will win a fight, and you don't lose your principal. And it sounds like really whatever. I'll say, oh, it's like a karate token, right? It kind of sounds like a meme coin, but it's honestly, like I mentioned, going back to what we talked about originally, like our thesis. This is a new thing for people to do with crypto. I think what the karate guys got right is like, yeah, we don't need to make this some like philosophical libertarian thing. It's like you look at combat sports, you have a lot of young men gambling on sports. Like crypto's it's not that far off.
No.
And the token actually has use. You can gamble with it, right? You can like actually vote on what you want to happen in the league. I would love to see more experiments like that on the consumer side. I think we need more of that.
Yeah. No, it just makes me think of that Adam Sandler meme of like, let's bet on this shit.
Exactly. Exactly.
This is leans more on like the technical kind of side. What are your thoughts? Because this is something I'm brutally diversified in terms of my like personal portfolio. I'll make no secret of it. I kind of have, it's not necessarily like a spray and pray kind of thesis, but it is very like, oh, there's so many different narratives. I kind of want to be spread across the ones that I'm interested in. It's definitely not like a consolidated core position of like, I have three things, we're running with it. What are your thoughts on concentration versus diversification? And I guess like, what are the qualities that your best investments have had? And on the flip side, what have been the worst? What are the qualities of the worst ones?
So I think there's two ways to answer this. One is like from a fund perspective, and then like one is just like a PA. So on the fund perspective, we have about 40 core positions of fund. Generally, we're trying to underwrite like a fund returner if they're right. So let's just say that's like 100x. And I think generally like more concentration makes sense in like venture portfolios, just because a lot of these things go to zero and actually, a lot of these things don't do that well in crypto. If you're early enough, but like you need, if you are right, like you need that to be able to kind of pay for a lot of like losers. And so I think we've seen that with our first fund where like, I don't know if I can like disclose our exact position, but like things like CyberConnect and Galaxy that have done really well, like we were first round investors in those companies, and those positions are now pretty meaningful in the context of the fund. And things that have done really well were like we own like whatever 10 bips of the network. Even at $1 billion valuation, like that's not really moving the needle even on a small fund. So that sizing matters a lot. On the PA, I'm like probably 30 to 35% Bitcoin and like Bitcoin, and then 30 to 35% ETH. And then I generally think like just sizing up for what you have conviction in makes sense. I think there are exceptions to that, like the meme coins. Whenever like someone like whatever, it's like I have some Bowden, Popcat, like I think those, just because those really are throwing darts, unless you're gonna be like, this is what I'm doing, not 9 to 5, but whatever. Like this is how I'm spending
24/7. Yeah.
Exactly. Which I'm not doing. You kind of just want to like have some like chips on the table on each of them, but not like meaningful positions.
Yeah. Well, with the meme coin thing, like that has just been absolutely insane. I feel like the Solana side, Well, and it got me thinking that for every six-figure P&L that you see screenshotted on the timeline, there are 10,000 round trippers that bought something, held it, and are now like, great.
Yes,
Yeah.
100%. Yeah, you want to like survive in this industry, like being annoyed at people for making a lot of money or more money than you. I've had to like learn to accept this personally. Like, fuck, like I worked way harder than that person. And they did whatever. They went to work at this token project and this thing is ripped and they've done really well, even though I don't think they're like that good.
Yeah.
You kind of just gotta let those things slide. We're not literally all in this together because especially right now, a lot of it is like PvP, but like we're fucking fortunate to do this stuff. And like, I kind of think crypto is all going to work out. So yeah, you just gotta like, honestly, a lot of this industry is just like staying alive long enough to like,
Yeah.
make something happen.
Watching the TradFi side of Twitter, like FinTwit, when they came across the guy that did really well on Bowden, his name's Barkery. And I think I believe it may have been, I can't remember if it was 26 or 46, but it was around about $50 into 430,000 on Bowden at its peak. And so he's got that screenshot of that P&L. And
I
then
hope
the FinTwit's like,
did he did he sell?
He took profits. I think he's holding a core bit so people aren't like angry at him and they're like, oh, you sold the worthless token. It's like, yeah, of course I did. But I think he's being a good sport about it. And he's like, I'll keep some. But I think he's very happy.
I'm glad to hear that. Look, yeah, that's the cool thing, right? It's like you could be in a fucking small town in Ukraine or you could be a high school student. You can make fun of these things and like, sure, like, are they like dumb? Like, yes, obviously to some extent, but like billion people play the lotto every day, right? This is just like a way better form of the
Literally.
lottery.
It's slightly more like aggressive in PvP, but it does feel like it's still gambling. Like meme coins.
It's more fun.
Yeah, and you've got charts, so it's like you can justify it as less rolling the dice.
Exactly. You can
helping yourself roll the dice onto red. Man, final question, and I'm just lifting this from up only because it's a good way to close out the show. What's the number one piece of advice that you'd give to yourself if you were first starting out in crypto? If you could go back in time, or what's the number one thing that you'd say, yep, this is what you should be doing?
I think where I made a lot of mistakes is like just being really focused on what's in front of me, whether that was like my job at CoinList, whatever I was doing. And like when someone mentioned something to me like, oh, you should check out Solana. Or like when, like I worked on the Solana sale before it was live. I spent a lot of time with the team. If I'd spent more time actually like digging into like the documentation, understanding what it is, like, yeah, I would have bought more, right? So I think like not getting too in the weeds on what's in front of you and just leaving extra mind space to just like, you're going to see a million tokens mentioned on Twitter. People are going to ping you about them, but like being able to just spend like 5 minutes on like every one of them and be like, oh, okay, like this is interesting. And then the ones that are like actually being able to spend more time, that's how you get into things like, bit tensor early or whatever. It's like someone mentions it to you offhand and you're not like, oh, that's like the 100th thing someone said to me today. I'm just not going to do anything. And I think that's where like a lot of like value can be captured in this industry. And so that's something I struggle with on a daily basis. I have a lot of shit I need to do every day. But especially early on at CoinList, like I pretty clearly just should have made more time to do that.
Regan, thanks so much for coming on the show, man.
Yeah, Tom, thanks for having me on.